What's going on, everybody? Chris Franks with Texas West Capital. Sorry, guys, you got me. I'm just, I'll be honest. I was eating some chips, all right, some tortilla chips. This is Texas. I had a hankering. It's about lunchtime. I didn't have breakfast. My fault. So anyway, hopefully you guys are doing all right here. I've got Fibbo sitting in the wings, man, ready to join us here. As always, hit the thumbs up, hit the like. Leave a comment, folks. Please retweet or, share the link wherever you happen to be. It just kind of helps us get out there a bit more. If you want more people to, know about Texas West Capital and what we talk about and the important things that we stress about trading. And Fibbo, of course, in his ideas and his, in his theory and everything, just do us a favor. It takes 2 seconds to do it. Jump on it, get it done, and we would appreciate that. So, Fibbo's here, like I said. He's going to be talking about some of his charts. I know people are like, really kind of freaking out, especially when it comes to Bitcoin. I think they're still kind of freaking out about, what do you call it there? The stock market as well. I think we're probably more, closer to a bottom than not, but if we're not there already. But the idea that the market has done anything yet that says the bull run is over, whether it be for stocks or Bitcoin, is absolutely ridiculous. Technically, nothing's happened yet that says that. Now, that doesn't mean it can't happen, but I've just got everybody that's been screaming, "Oh, it's the cycle top." Basically the same people have been screaming it for years and years, or basically the last few years every time it goes up. But technically, there really isn't anything there, guys. But let's go up. Let's head up and get Mr. Fiboswanny on here. What's on, man?
Hey, what's up? I was trying to fix my camera here so I can.
I was trying to give you some time, man. I was trying a little bit here.
Well, I'm trying to get some light. There we go. I think I'm all right. So what's up?
You gotta get some light on your face, not the back. Is what you mean, right?
Yeah.
Oh man. So yeah, man. God, you know how it is, man. We got Bitcoin doing its thing. It's pulled back here today. Everybody's freaking out, man. Again.
But it's going to be a good risk management lesson on this one. But that's the name of the game, though, is risk management first, right?
It's really the only thing that matters, right? I mean, in the grand scheme of things, because it's the only thing we control is how much we're going to lose, right? We don't control which way the price goes. We've been in the market, you and I, for many gray whiskered years. And neither one of us is big enough, even with all that, to move markets on our own, right?
No, not even close. But I do know market makers that, no, I'm just kidding. No.
I got friends that have friends. Let me tell you.
I got friends and friends. You know what I mean? No.
Let me make a text, and 5 years later, maybe we'll get something.
No, I wish I was in that kind of group. Not me.
Well,
I'm just steady as it goes, man. Boring but profitable, right?
hey, that's the best way to be. Make enough to have a nice living, not really have to worry about money, and enjoy what you do. And I mean, that's life. I mean,
I had the get rich quick mindset when I was younger. Not anymore. It's all about small gains and exponential growth, right?
Well, it's because you already got rich quick, right? When you were younger. That's why you don't do it anymore, right?
Yeah. I'm rich because I have a family and kids and a house.
There you go.
That's my rich right there.
Even if it snows like a mother up there, right?
Well, it did this past winter, but hopefully not the next one.
Well, anyway, man, I guess we'll go and jump into your charts here.
Yeah, let's rock and roll.
You see what you got here, buddy? Let me throw that up there.
I was going to start out with Bitcoin and looking at the 4 hour here. This is where the risk management kind of comes into play, because what was happening was we went into the bull zone here, and as we were playing in this bull zone, and also we bought back in here on this dip. So as we were running up on this, we had a couple trades, but then I was sitting with 40% long, and when I say 40%, it's 40% of that bucket of capital. It's not 40% of my overall net worth or anything like that. But I got it up to 40%, and I can't remember exactly what the average was. I mean, my group knows, but what it is I kind of still stick to plan. So what happened is we went into the bear zone here a few candles ago, and we had 3 settles underneath the shallow fib, or the previous shallow fib. Because when you look at the previous zone here, this 86,807 was the level to watch, and then it broke. And this first candle right before the break was actually underneath it, because the low on that was 86,738. So it was just underneath this. So that was the first settle underneath. The bear zone had this large candle, which was the second settle. And then we had this like kind of little doji candle right there. That was the third settle. And that's where I got out of my stuff. Well, technically, based on plan, once it went into the bear zone, you are supposed to reduce everything down to 10% exposure to see if it would bounce out of there or get that third settle. And it ended up with the third settle. So you got out of the last 10%. I got out of all 40% at one time, because when I woke up this morning, it was already in the bear zone, and I didn't have an alert or anything like that. So I ended up selling all of it at one time instead of once and twice, but it really wouldn't have mattered because it would have been right around the same price. So, so it all kind of worked out. But the reason I was saying risk management matters is because even though we went into a bear zone and I had to sell my 40%, it was still slightly positive or profitable. Not much, but it was enough to where you're not losing. And that's the main goal of any kind of system, is to mitigate that risk or that loss potential on some of these things. So as the trend is growing and you're pushing your positions, it was really nicely set up for a nice run, but of course it didn't run, So what happens is now we go into this bear zone, and I'm looking for the target down here at the extension, down here in this 81 to 82 range, on this previous low. And the reason I'm looking for that is just because that was kind of the start of the run to get us into that bull zone. And then when it came down to this point and ran higher, it stayed in the bull zone here. So this is going to be a nice level that I think there's going to be a lot of buying interest if it gets down into that area. Now, it might not even get there, but that's where I would consider getting back long while in the bear zone, because of two things. One, if you get down to this level inside the 81 to 82K area, this will most likely be pushing into oversold conditions, or at least underneath the bear zone. And when it gets underneath the bear zone like this, and it gets overextended a little bit, as you can see, when it started to work its way back up, this is got into a nice bull run. In other words, getting that overextension brought a lot more buying interest in, kind of pushed us up as momentum was starting to build. So that's what I'm going to start looking at for here, is as we get down to this level here. Right now I have 81.6, and I have a limit order sitting in there at 81.6. You don't have to copy me and not financial advice, but that's what I'm doing. But the 81.6 is the limit. And I think if it gets hit, it'll be down underneath this. But really, other models that I look at and other things that I look at is you really don't want to buy it until it comes back up out of that zone. So if it gets overextended, you kind of want to buy when it comes back in. But the price action could actually do that, but we'll have to kind of see what it looks like if and when it gets there. And I keep moving my fibs down because the price keeps getting lower, which just moves the shallow fib, which really doesn't have a lot of meaning unless you're playing the short side while you're in the bear zone. The only other thing would be is like if you wanted to do some trading while in the bear zone, you could buy at the 100% level here, which was the start of the bull zone right here. You could buy, I think that's what, 83.575. It's actually hitting there now. So you could buy that, and then if it pops up, the shallow fibs yourself. So if you're going to do that, you're probably going to be using leverage and those kind of things, because it's not that big of a percentage move. But if you want to trade while in the bear zone, you could do that. I'm more along playing the long side, unless the longer term time frame, like the weekly, goes bearish. And if that happens, then I'll start playing short side. For now, it's just more patience and waiting for the bear target to hit. Or if it doesn't reach that target and starts to turn around and go the other direction, I will buy it once it gets back into the new bull zone to help me at least give a signal that the next trend or the next move to the upsides is going to happen. And right now that's looking at 89.7. So it'd have to get all the way back up, pretty much way up here. I mean, it has to get, and that makes sense because we're kind of in this, you're kind of in this zone of consolidation, really, because we started this bull zone, rallied up, and then we're coming back down, and that's a full retracement. So you could buy it here with some risk, but I'm going to stick to my plan and wait for the target down here at 81.82 or a new bull zone. So that's where I'm looking.
I like your target area. I updated the group there today with with my downside target, which is around that 82,000. Where is that? It's around there, around 82,300 or so. It's that weekly S1 pivot.
All right,
so,
cool.
It's right there around your area. And when I give those levels, obviously, it's always about there's a range, right? It's never like an exact level, but yeah. So that's like my initial kind of target area there as well. So I like it when, obviously when we align with what we're looking at, because it tends to work out pretty well. So yeah.
Yep. No, I like it. And the other thing is, I just looked it up. I was 40% long. Where is it? 84. I had an average at 84,890, and then sold all 40% at 85,210. So it's not a ton, but it's not a loss. So if you're playing it, it would have been really nice for a rally because then you would make bank. But since it didn't, we're back in the bear zone. Get out, reestablish a new long, and then just follow plan and just go with it that way. When I go into the daily, and here's another, this level right here on the 100%, people could be buying it here, which could make sense because when you look over at the daily, the 233 EMA is what I look at, and that's being tested at the moment, which is currently at 83.7, which is right where we're at. So that could be a buy based on the support of breaking back above this, and maybe there's buying interest that'll come in at this moving average. So there is that. Yeah.
Can you do us a favor? Can you zoom in a little bit, man? Might be a little bit harder for people to see.
Oh, yeah.
That way they can kind of really get in there and see what you're talking about.
Yeah.
I know. I'm with you, man. It's hard. We got the bigger screens. It's hard to remember to zoom in.
Yeah.
Awesome.
Yeah, let me move some of this stuff around here. When I'm looking at the 233, it's this moving average is where I'm looking, and we didn't have 3 settles here, but we did have 1, 2, 3 settles right here. So now it created this as support. Rallied up, came back down, and now we're testing it again. And on the other thing, let me pull the RSI up here a little bit. You probably see it. A couple of things that I look at on the RSI. Once we broke this to the downside right here, this was kind of a change in some things here. And then, of course, we rallied back up, but it rallied up to this point and kept us, underneath there until we got into this bear zone, or this bearish move. But then when you look at this, when you start to break up here and it kind of tests here, and then it's testing this RSI trend line, this support along with the EMA, I mean, could be a buy, but again, I'm not doing anything else on the daily at the moment, because back here, my target hit here at the 61.8% level, which was a buy. I bought right here when it touched really nicely right on this candle, rallied up, didn't go bull, but then dropped all the way back down again, and I bought again. So just to add to it, and the reason I added to it is because the weekly is still bullish. So I wanted to establish some kind of foundation of a long to kind of hold to have while all of this support is being tested. Now, can this break here? Of course. So we could be falling back down to that point, but I'm willing to take the risk to have some exposure in case this thing starts to rally on out of here, because it's the kind of market it is. You never know when something just crazy starts to go on and all this buying interest starts coming into the market. And you want to be prepared for that, at least have some type of exposure in case that happens. But then again, risk manage your stuff to where you're not losing while you're doing that either. You want to, right. I got room to breathe here at the moment while I have that position on. So that's what I'm kind of looking at there on the daily, is just that I'm not adding any more until I get into a new bull zone, and then I'll press that position. And hopefully once the daily goes bull, then we'll get a lot more buying interest into the market and kind of go from there. But nothing else really on the daily. Going over to the weekly, one of the things that I'm watching, of course, is the bull zone to see if we end up going into the bear zone or not. This last test did not. And as you can see, all these other lows that we were kind of looking at held in pretty nicely. And a lot of these lows kind of come in with the test of the trend line, on these lows here. If you took the fibs on this one, this was a 61.8% level right here. And that kind of started this run. So I'm going to be looking for that as one area to watch. Now, the momentum is really not super strong, or at least it's coming down on the ADX here, and the directional index lines are all mixing together. So you're getting into this little period of limbo, I guess. But one of the things that I like, and I'll blow this up so you can see it a little better, is I was looking for 3 consecutive settles underneath this support zone, which came in from 83.5 to 91.1. And another reason why you might be buying right around here is we're testing this 83.5 on this weekly zone, which is also support. So that kind of goes along with the daily support that we're finding right now on the moving average and some of the indicators there. And then the 4 hour, I'm just kind of waiting that one out to see if it'll wick down into some of those levels to buy. But since we didn't get 3 settles here, this still maintains support pretty well, and it resets. So in other words, you need to have three consecutive settles. So you would have to have 3 more weekly settlements underneath this line. But I do like that we popped back up and are now still testing this as a support zone. And what I wrote down here is there's no 3rd consecutive settle. So it remains support. Now, of course, this trend line here is going to be remaining support also. So this whole area in here, to me, is still going to be an area that I think could bring in buying interest while we're testing some really, really strong key support levels in this market. Now, of course, if this rolls over, that's a whole different ball game, and we're going to have to go back to the drawing board, because that could really take us down into some, 50K, 60K. It could get pretty ugly.
Maybe even 40K even, yeah.
Yeah, it could easily go down to that point.
Yeah.
But it hasn't happened yet. So I got to maintain the same plan I've been on for a while here, getting that foundation built on buying that dip on the daily. And if it breaks, then I'll get out of the daily. And then, you might take a loss, you might not, depends on the price action. But then again, it'll be a small loss to where you can reestablish much better longs at a much lower price on a much larger correction. But right now, I don't know, this high right here in here with this whole area, I'd really be surprised for it to break back down below 75 on here. And 76.8 is where the bear zone is. So you could wick down to 73 or 75.3, go into the bear zone, and then pop back up because even if it goes into the bear zone here underneath 76.8, you have to have 3 settles underneath that 75. Once you get the 3 settles underneath 75, then that's when you get out and look for the 55K or maybe even lower. So all of that together is not the greatest in the world, but support is still there. Like you were saying earlier, everybody's kind of freaking out, but when you look at it from a technical perspective, the weekly is still maintaining bullish structure. Even though we're going through all of this stuff and our emotions are flying all over the place every time the market moves back down when it's trying to rally, and everybody's like, it's going to die, it's dying, all that kind of stuff. And you got to kind of not look at that and kind of look at the indicators and kind of see what's going on, and that'll kind of reduce the stress on your mind and your emotions. And one of them is, even though this price has come down this week, momentum hasn't built while it's happening. So to me, that's just more consolidation, just more trying to figure out which way to take this market. And right now, everything leans toward the upside is where the market should be headed later on.
And you use the ADX there for the understanding the momentum to the downside and upside, right?
Yeah. The black line here is the actual ADX, which measures the trend strength in the market. And depending on what trend we're in, that's what you would want to market against. And the red negative directional index did cross the green here, but ever since it did, it's been dropping ever since. So to me, even though it broke into that bear, and it was caused by this large red candle here on the downside, but once that happened, momentum really hasn't built for the bears as price was dropping. So in other words, there wasn't more additional selling interest. There wasn't more sellers coming into the market. It was more just profit taking and just general trading. Now, if there was a lot more selling interest coming into the market, that momentum would switch to the point where it would build momentum for the downside instead of just kind of falling. Now the ADX is still above 25, so it's still in a strength building zone, but it's been falling ever since the red negative directional index crossed. So to me, it's really not building a ton, and it looks like the green positive is actually going to try to get back up and cross back. And that would make sense because buying interest should come in here and start to push price back up. And then that would switch it back into where the bulls have a little bit more of control of that near term that we're in at the moment. So right now it's this range bound trading back and forth, which gets people upset and scared and those kind of things. But you just gotta kind of wait it out and see what's going to happen. And right now I'm still long and waiting to see if this thing's going to pop. And then lastly, I put on here, since the quarter's coming to an end, another thing to watch here on the quarterly, which is a weird chart, but two things I had on here. I had this high to a low here, and then you look at the extensions, and we're in this 83.5 to 91. You kind of saw that on the weekly also. Mm-hmm. So it's the same one, and we're testing the bottom at that point right here. So on this, it's just showing you another spot for support. But then on the other end was when you take the low to this high. Well, we could do it two different ways. One is you got the 38.2% level here at that 73.4, which should hold based on that weekly support level. But then again, when you take it from this point, you could also see where it hit the high and then retrace back to the 38.2% level. So every time it rallies up, if it retraces back to that, what I call the shallow fib on all my stuff, is that's a spot that the bullish trend should continue, or at least it gives it a better probability of continuing to make new highs later on. So to me, the cycle high really isn't in yet, as long as that weekly is still maintaining support. And of course, this is still maintaining support on the 38.2% levels. It's when those break down is when you start to get a little bit more, okay, this thing's going to correct a lot further. So right now, 38.2% level held here and rallied. And then if you take it all the way up to the high, it didn't quite reach there, but it didn't break it either. And then right now we're hitting support on this extension. Now, if this holds like it should, and just like on the daily or on the weekly, this is the same one right here, and we're back above testing it, and it's testing a support. Then that 122.488 is still that next target as long as that support holds, and that's where that's that level that I'm looking for on this move to the upside. Do I think that's the cycle high? I don't think so. If it gets to the 122, that's great. But I have other things that I follow on different patterns that it should go much further than that this year if this support holds and we start seeing higher highs in the next couple of months here. And really April should be the month that should tell us if this is going to start rallying or not. I follow a couple other guys and I started looking at some of their charts, and they got first week of April could be a time frame that they were looking at that could start to pop this thing. And we're kind of coming into that point now, and we're all testing support right around this time. So all of that together, I think we can find some buying interest to pop this thing up.
Well, and it's interesting right now because I talked about this last week, I believe it was, JPM's collar that they've got that they do quarterly, is here it is, right at the end of the quarter here. Mm-hmm. And so that's, potentially weighing, because that's pretty huge, potentially weighing down on the markets as well. So you know, if you need a narrative outside of the charts, I mean, you know, you do have that JPM collar that's, you know, that comes to a close here today, and then you know, and then they do another one for the next quarter with that fund. But yeah, so I mean, you know, if you're looking for downward pressure and whatever, we had triple witching last week. You know, it wasn't quite as big as December's. But you know, I said at the time, I said, you know, even though we had that, maybe we'll get some volatility. But the big thing we're really looking for was what happens at the end of this week. Once that JPM collar is done there. So
yeah, no, that makes sense. And another thing is it's tax season. Anything can happen during tax season. You know, you got a couple more weeks for April 15th time period. A lot of people sell off a lot of stuff to pay for different things, and who knows what's going on. It could be a lot of different scenarios.
Pay your taxes, folks. It's not worth it. You're not going to look pretty in prison.
But I mean, it's true though. I mean, this time of year, like if someone's got a big tax bill and they got you know, they're holding Tesla stock, and all of a sudden they want to sell it off. You know, a lot of people might be selling stocks and other things to pay their bills. You know, and I'm not saying that's the only thing, but you bring in tax season and everything you were just talking about. All of that together makes sense of coming down into this market and testing support. And hopefully support holds. Everybody pays their taxes, gets back long. Let's go on for another year, you know. But that's where we're at on BTC. The only thing that was kind of different is that we went into the bear zone here on the 4 hour and just got out of positions and just kind of just waiting for it to reestablish another position. And that's the boring part of trading, folks. You know, that's the patience and waiting and all of that. That's the boring part. But if you do it and you wait it out and you wait for the new long, you'll be happy in the long run. But right now it's just kind of, that was a bummer, you know. It was all setting up really nice, and all of a sudden it's like, nope, we're gonna try. We'll try again another day.
Yeah. So two things I want to add here real quick before we move on. First thing is, if anybody's paying attention, if you look at the larger picture, there is a descending resistance. You can look at on the daily, coming about from the first lower high off the all-time high right around the end of January. That's kind of coming down there, and we're kind of getting rejected right before that. So that's the first thing. Second thing is market structure. So coming off the all-time high, we are in bearish market structure. That's lower highs and lower lows. But if we can get a breakout above that 95,000 area from the beginning of March, so whatever exchange you're looking at, that one right there, that is the last technical lower high right now before the last lower low. So if we can break above that, that will break that bearish market structure. And then now it doesn't mean it can't then continue lower and build some bigger, larger bear structure. But usually what we look for anybody paying attention is we look for a breakout above it, and then we wait for a pullback, and then a breakout above our breakout. And that's kind of like a double confirmation on that likelihood that the bearish market structure is broken in this case, because, you know, it's bearish market structure, and that we are following bullish market structure off that 76,000 low. So just for anybody that's kind of looking at more generalized areas as well, based on market structure and whatnot, that's something I would look at for sure as well.
Yeah, another thing I was just looking at was this high you were talking about going down to the low. The 61.8% level was right there as resistance. So would have been nice to break this, because then I think we could have got into that bull zone if it would have broke. But that was another little area that dropped. But now we're at the 38.2% level and the moving average. So that's where we're kind of in this little limbo area. So either break down and go for a full retracement, or head back to the other side. Now, another thing I was thinking was, if you go back this way and you go take the low from here up to the high, we're right at the 38.2% level, which I just kind of talked about before, is if those hold, it's a really good impetus of pushing harder, faster, going to the upside. But again, it's got to hold, and buying interest has got to be here, or it's probably going to drop to this 81.2, which you kind of talked about as that area. I think you were at 82.2.
Just 82.3 or whatever, just right around there.
Yeah, what's $1,000 among friends? So
at 80,000, it's not much.
So that's what I'm kind of. That's kind of the way I kind of use the fibs. While even though you're getting lower highs and those kind of things, you can also find support and resistance just off those legs. And if they correspond with other things you're looking at for support, then that could be an area that buyers could start to come back in, and we're right there right now. We'll see. We'll see what happens, because you go there, you're right on this one. But again, if it doesn't hold, then it could get ugly, because then as we always kind of talk about on any kind of support or resistance level, it's trench warfare. And right now there's a whole bunch of buyers that are in that trench, and they're all shooting at the sellers, right? And the sellers are coming in, they're shooting at the buyers. And depending on the strength of one or the other, are the sellers going to overtake that line and make it theirs? And all the buyers retreat and go, okay, well, where do I set up camp? Well, if you go to set up camp, most likely you're going to set up camp either at 81.2, or if the momentum is so strong and the sellers are coming in and they're just overtaking you, and then you're going to have to retreat back. Then you're going to have to retreat back all the way back down to the previous lows.
Yeah.
You know, it just depends on how much pressure is being built. And right now, when you look at the internal momentum, the momentum's really not super. It's been coming down for the bears. It's just starting to click back up, and that's where it gets kind of sticky. That it could start to turn around, and that pressure could start to come through. Hence, while I'm not buying here, is because of that, and that's why on this 4 hour, that's why I want to wait for a much further move to the downside, which would be a lot better support to buy on the 4 hour here, which matches where that 61.8% level would be if this ends up breaking and taking off $3,000 in the market in about 10 minutes, probably, if it ends up hitting stops. Or could be 10 minutes, could be 10 hours, who knows.
Right.
But let's get some buyers in there. Let's see what happens. That's BTC. We can move on to ETH.
Oh yeah, everybody loves to hate ETH.
Here, I'll do this one in reverse. I'll start with the ETH on the weekly. And the reason I haven't been trading Ethereum for this reason, and the same reason I wouldn't trade BTC, is if the BTC market, if its weekly chart was in the bear zone. But Ethereum's weekly chart is in the bear zone based on my model. And I'm waiting for a move down to this target, which is at the top of the extension zone, which also matches the trend line objective. So both of those kind of match. So for me to get long Ethereum, I need this thing to really start to crash or get back into bull zones. And right now we're in the bear zone on ETH, not on the weekly. So I'm not doing anything on the 4 hour or the daily. So I'm just kind of waiting this one out, trading some other things like gold, silver, other things I'm trading that are actually moving and getting us some trend and some volatility. But with a bear zone here, so when you go over to the daily, there was a target that hit here. So if you're trading it, you're long right there and you would be stopping it. I didn't buy it because the weekly was in the bear zone. I would want to see it break down much further than that. And then also on the 4 hour, went into the bear zone again. It's getting a little overextended here. But it's risky, but you would be buying it in this zone between 1855 and 1880. So we're right in there right now, and you could buy it and then sell it at the shallow fib for a nice quick trade. But again, I'm going to be waiting for much further downside, which is the 200% or basically the previous low down here at 1752 before I would even consider going long on the 4 hour. And that one's at 1752. And if you go to the daily, that's right around 1745. Both support areas are right around the same area, but not areas where I'm buying. But that is an area that if the Ethereum weekly was in the bull zone, then I'd be buying there with a little bit more confidence. So I don't have enough confidence in this one. So I'm just scrapping it all together. There's plenty of other things to trade. I'll wait for this to establish a better pattern, or at least a better, higher probability pattern to get something out of it. But so not much with Ethereum. That's about all I got. You got anything on Ethereum? Have you been doing anything? Or
I mean, other than we had the great call off the lows in June of 2022. It's kind of hit some upside targets there, pulling back right now. Just kind of waiting for it to, like you, just kind of waiting for it to do its thing here.
Yeah.
And kind of give us a little reason to want to be bullish on it, right? Basically the way I attack the charts is, I look at the larger time frames. I note that the points of interest on those larger time frames, And then, as we hit them, zoom into the smaller time frames and look for signs of reversal, signs of change of character, stuff like that. To whether I'm going to go long or short on it at those areas. So right now it's just kind of waiting for it. It's it's come to a pretty great area right now, but we'll see if it holds. We'll see if it holds or if it continues lower.
Cool. Yeah, just looking at some other things that I just some TA here. Looking at the low to high here on just this leg. When you look at the 61.8% level breaking down here and then coming back up, hitting as support or as a resistance, this 1950, and if you kind of come over here, that's kind of where we're at the moment.
Yeah.
So this is a pretty big deal if this holds or not, which makes sense because we're right at some areas that should be buying there and here. So we could start to reverse there, but I'm just not liking it at the moment.
Yeah.
But the breakdown here, then if you take if you go the other direction, let's have fun with fibs. If you do the low here and go up to the high, once you break the 100% here, it kind of came down into this area here, which could have been a nice place to buy. I don't think it reached there, but that would be that first level to watch off the extension. And then it kind of held there and took off from that point. So all of that together is that this level right here where we're at the moment is pretty significant if it's going to hold or not, which is kind of interesting because BTC is right on that edge. This one's right on that edge. We're getting right on this point. So long term, the risk reward is good. If you're long on BTC at these levels, the upside potential is probably much, much greater than the downside. And then we'll be out on the downside if we get stopped out. So I like the risk reward there. Small loss, much, much larger gains if the thing starts to turn around.
Zooming out on your chart here, I just want to say, maybe I could see the possibility that previous swing high there, July of, what is that, 2021?
Over here?
Yeah, I could see that. That's 3 down there. Going back up could potentially be 3 up.
Are you talking 3 down right here? This
yeah.
1, 2, 3?
Yeah. And then potentially it's 3 back up, which recovers more than 90% of that wave A, and we're getting a sharp drop. I got to be honest, that looks like quite possibly it could be a large flat correction, which would have us heading down toward that low. Yep.
No, I see what you're saying.
Yeah.
That makes sense. So in other words, here I'll just you're basically just going to have a flat position that basically fills this position. 3 down, 3 up, and then you're back.
Then 5 back down.
Yeah, 5 down. And then it would be down at this target area, basically right there.
Yeah, I mean that's it. I got to be honest with you, man. You got a pretty clean chart here. I can see it.
Yeah. I see exactly what you're saying. A lot of times I won't put the Elliott wave on here just to kind of keep it clean. But that's perfect that you're bringing that up because it does look like a nice little flat, not little, but a nice large flat going on here.
And for anybody that's paying attention, the way a flat usually works is you'll have like a sharp wave A, and elongated like takes more time for the wave B, and then you have a sharp wave C again. And that was what I noticed when you first pulled it up. Zooming out here, I noticed this, pretty much a sharp move down, elongated move over, and then we have this sharp kind of move going down. So, not saying it has to happen, but just structurally, it does look like it could fit.
Yep. No, I'm with you. And another thing is what I'm looking for is, once it made, this is the threshold right here going into the bull zone. So once this low breaks and we're right at that level, the extension is what I would be looking at. And I'm looking at at these lows right in here where the 127% hits.
Yeah.
And that's where that target kind of hits right there. But the other thing is if you look at the where we're currently at and it's breaking the low, if you take the fib off of this low up to the high right there, the extension's a little bit, I thought it would be a little bit further, but you're looking at 1296 to 1577. Or I guess you could also look maybe, well, I guess it's about the same price. Yeah, you're looking right around that area. I was just trying to see if this zone matched this line, but it's all underneath where we are, so that's what you want to kind of keep an eye out on.
Yeah.
All right, let's move on to things that are actually moving. All right, or at least tradable at this point. Going on to
in a
gold.
positive direction.
Yeah, exactly. Going on to gold. This is where I'm kind of making up some money when everything else is kind of in the toilet. But what I'm looking at here, I cleaned this chart up. We had a couple trades on this bull zone to the upside. I have not done anything since this move because we had a contract move. This is futures, so we had a futures roll. So that's what this big ass gap is. But the so what I'm looking at now is I want to buy the shallow fib on a correction back on this next month's contract. So the 38.2% level is at 30.46. And that's where I would put an order in to buy on a correction to the downside. Or if you want to get really, really crazy, you could actually buy it now if you really if you want to take the risk. And the reason for that is because this target at 30.93 hit already, based off the roll, not off of what I was looking at. But since there's been 3 settles above this level, you could actually buy it and still work your target at 31.48 is where the target is. And that's basically it's just a trend-based extension off of my threshold. Whenever I go into a new threshold, I'll take that leg and then just see where the fib extension targets would take us. And that's where the 31.48 comes into play. So I'm not gonna buy it. I'm only gonna buy it on a correction. At this point in time, the only other thing I would do is if it got up to 31.48 and it still wants to do 3 settles above that, I would probably be buying it on a further move to the upside. But that's a long way away, so we'll have to kind of see what happens there. But I like it because we had a couple nice trades in here and made some good profit. But now I'm just in a hold and wait pattern, waiting for the shallow fib to hit at 30.46. Then we look at the daily. The daily target hit at the 30.78. 31.24 is where the high has been so far. On the daily, we have a couple of different targets. I have the trend-based extension, which comes in at 32.95, and also this trend-based extension. I'm using both of them together, and they kind of match up pretty nicely right here. I mean, they're $20 difference, but it's pretty close to where these match up, and that's where I want my target. And the reason the target is at 32.95.
Okay.
Basically, it's 32.95.70 to 33.12. So you're looking at what, $22 or 20. I can't add right now, but the reason I'm using both of these trend-based extensions is this previous shallow fib here has never been broken yet on every dip in the market. So if I brought this back down, every time it made a high, as you can see, it never dipped down to hit it. Never dipped down, kept going and going and going. Even on this one, it didn't even break here. So as this keeps making a high, this is really my big line in the sand here. If it ends up breaking this, it would be pretty ugly. But that's why I'm still using this as targets, because that pattern's still in play. But then if you look a little bit more near term, as we went into the bear zone here, even though it went into the bear zone, it never broke this of where it was. So it was just more of a small correction in an overall strong bullish market. So I'm also taking this one, which is the newest threshold, and then that's where these numbers kind of come from, and that's why I like this overlay on both of them together as a target. Just the way I look at things to find targets to the upside. No, unfortunately, I'm not long because I got out of all of them already on my 4-hour and my daily. I just haven't traded. I haven't traded this part really. It was this part that I traded, and I just haven't done anything else yet. So right now, shallow fib on that is at 29.57, which I would buy when it would retrace back, because the bear zone doesn't go bearish until 28.97. So 29.57 would be a buy at that shallow fib on a retracement. And then if it goes bear, then that would be our stop to get out. Otherwise, I'm not doing anything at the moment. other than that. Had some good trades. Now I'm just kind of waiting for a better entry point. Given the metals going on to silver, I've traded this one a couple times. I'm out of this one and I'm waiting to get back in for two things. We got the bull zone here, rallied up, took some profit, target hit right here, retraced back to where the shallow fib would have been right here. So we bought back again and then rallies on up. So I'm still long silver, waiting for 36.96 target up here at the 200%. I'm long at the shallow fib. I might actually press my position. For one, if it comes back to the shallow fib now, that's at 33.99, and I'll basically buy it at 34 if it gets down to the shallow fib, and I'll add positions, which would bring this target into play for profit. Or if it doesn't come all the way back down to this point, and we get 3 settles above the 141%, which is at 34.67, which we've had one so far. We're on the second one, which goes off in another 4 hours or so.
Yeah.
If that happens, then if you go into the next day, which will be Monday or Sunday morning or Sunday night into Monday, this one would be the third one, and then I would buy it if that happened on Monday. If it's still above that on a settle, I'll buy more, and then I'll get more position going forward. So I'm either going to see a correction back down to the shallow fib, or I'm going to buy it staying above this support, which isn't really support yet for me because I need the 3 settles. So that's it on silver, looking pretty good. And go ahead.
Oh, no, I was just going to say, let me clarify for people that come in, maybe don't know you. Fibo is a systems trader. This is his system, okay, guys? He's not married to the idea something's going up or down or otherwise. His system goes off. If it hits the level that he buys, then he buys. If it hits it where he sells, then he sells. If you're new here and you're like, oh, whatever. Fibo's not trying to convince you it's going to do one thing or the other. He's saying, listen, this is the way my system works. So I buy here if we get here. I sell here if we get here. That's a big difference than a lot of other people out there who, kind of are directional traders. And they have this, this opinion of which direction it's going. Now, Fibo may have an opinion that it's going to continue higher. But he's also very clear about, listen, but if we lose this particular support on this particular time frame in this particular way, then, again, utilizing my system, that would change my mind. So, strong opinions loosely held, right?
Yep. And I was just looking at this right here. This will be and that's good, Chris, because it is a system, and you got to kind of stick to it. Because when you really think about it, nobody really knows where the market's going, right? You really don't. You're trying to use a system to give you a probabilistic edge to the market.
Yeah.
Because nothing's ever guaranteed, but if you have some kind of risk management strategy or plan like this, that's what helps guide you through this. And then if it's back tested and it shows that it hits better more than often than not, then you should play it. But the thing is the other thing is if you have a system like this, you have to play every one. You can't say, well, I want to play this one. I'm not going to do that one because it doesn't look right. And that's where that emotion and that mindset comes in. You have to play every one because you don't know which ones are going to hit because you don't know where the market's going.
Right. So, and that's the thing, right? This is what I talk about a lot, with traders and, when I'm on shows or whatever, which is this idea that when we come into trading as retail traders, we often think all about the particular trade we're on. We think about the profit. We think about that single trade itself. What professional traders do is they develop systems that work over time. That's what gives them the edge over time. So like you said, you have to use your system consistently. If you start picking and choosing, then it becomes emotional. You're picking it based on emotion. And the system is designed over time to make you profitable. The other part being, again, a lot of new traders come in and they look at the single trade, right? Versus system. The other part of it is they often they get into a trade looking for how much profit can I make? In their head, they've already spent the money that they're going to make, right? They're already instantly wealthy in their head.
Yep.
And the correct question to ask everybody when you first get into a trade is, how much am I willing to lose? Because the only thing you control in the market is how much you lose. As Fibo just said, you don't control the market. You don't tell the price where it's going to go. You don't know 100% where it's going to go. You may have a feeling. You may think it's going to do something, but the market doesn't care about your feelings. It doesn't care what you think. The only thing you control is how much you lose. So start looking at your trades when you enter them from this concept of, well, how much am I willing to lose if it goes against me? And how does that start to look? And if you can do that, you're going to be on your way to being a lot more profitable than not doing that, for sure.
Yep. No, I'm with you, man. That's good. I just did this real quick just to see this trend line right here. With the break, came back, tested, rallied up, came back, tested again, stayed in the bull zone. So marking this, that actually matches up pretty daggone close to my target. So that, to me, I like that confluence of that happening. So if you were going to ask me if I had a gut feel of where I think it's headed, then my gut says it's going to that target, but I don't know that for sure. So that's why I have the plan in place to let me know if it's going to happen or not. And that's why I'll buy it if it stays above this for 3 consecutive days, because to me, that's enough time to let the psychology and the social mood kind of run through the market to let me know if the buyers are still going to maintain that structure. And that, to me, the 3 days is enough time period, or at least when I did back testing, the 3 days for me is just, you could do 2 days, but and it's weird when you do back testing on some of this, the 2-day versus the 3-day is pretty close. Like you can kind of use both. But the 3 kind of edges out just a little bit better. Not a lot. You're probably talking, I can't remember off the top of my head, but it's like in single digit percentages. It's not like the 3 days like way better than the 2. But to me, I just like the 3-day just for my personality. It's more of a conservative. It gives me a lot more confidence to let that 3rd day settle. And that's why I kind of use that as my guide.
So
yeah.
No, I was gonna say. So let me ask you this, man. So obviously, you're like me. You're a bit more risk adverse.
For sure.
Whatever.
For sure. Yeah.
So do you gamble? Do you like gambling? Do you go to Vegas?
I do, but not. I don't. The way I gamble is if I go to like Vegas, or if somebody wants to go to like a boat or something, and I'll take a fixed amount of money. And if I lose it, I'm done. I'm not a big gambler, put it that way. I don't buy scratch off tickets. I don't do anything like that.
See, the reason why I was going to ask that is because I'm that same way. I'm not a gambler. I've never gambled in Vegas. I've been to Vegas one time in my life. I'm 50 years old. I have no desire, to do that sort of thing. And even when I was there, I had no desire to even put a quarter in a machine or anything. And I think, I've been trying to figure this out, but I think, when you look at that and you look at people who are traders, I think it tells a lot. I think those who really approach it as we talk about with, being a bit more risk adverse, where we've got systems to follow, stuff like that, and we're not just, emotionally gambling. What I'm finding is that as I tend to talk about these things we learn as traders that we do tend to, the ways we look at it, tend to bleed over in the other areas of our life. And what I'm finding is it seems like the more they are like you and I are in how we approach it, the less likely they are to be gamblers in Vegas or buy scratch off tickets and all that kind of stuff. And so I'd never asked you that. I was just curious.
I
right in there.
And every once in a while, like I'll do little bets here and there. Like for instance, I got my Orioles shirt on, right? And baseball season just started. Well, FanDuel had the Orioles to win the World Series at plus 1,600. So I'm thinking they're a pretty good chance. They're a pretty good team. I like them, so it's a little bit.
I like them. There was the emotional picture there.
That's it. But this is about the most that I gamble. So basically, I put $10 on it.
Ooh, you've been gambler, man. Boy, you brought home that money, didn't you?
That's kind of my gambling right there.
Bought the wife a new ring
much other than that.
with your winnings.
Yeah, exactly. It's just more of like, woohoo, I got it,
Yeah.
But yeah,
Sure.
I'm not a big gambler. Like when I was younger, I probably goofed off more than I probably am now. A
We all
little
did.
smarter, a
Yeah.
little more wise, I guess.
Yep.
So I'm much more risk averse now than I was in the past.
Yeah. Awesome.
Yeah. So no scratch offs for me or anything like that. I'm not a big,
I appreciate letting us have that insight into your life, my friend.
Yeah. Yeah. Nothing. I'm boring when it comes to that. But I like the confluence here. So if you ask me if it's going to go there, I'm going to say, yeah, my gut is that it's going to go there. But am I going to mortgage my house and buy it now? No. I'll wait for a little retracement back to the points that tell me to buy. All right, moving on. I haven't been trading the dollar because it's been ugly. We went into the bull zone here at this point, which started way back here, but it's been kind of, consolidated, just kind of range bound in here.
Yeah.
But even though it went into the bull zone, the previous shallow fib from this bear zone here, never traded 3 days above it or 3-4 hour candles above this one. So even though it went bull, it's still bear. In other words, it never gave a buy signal. So it's still really maintaining the same range. Now, if you were trading it, this target hit back here. So you could be long at this point, and you're just kind of waiting to see if this thing will take off. But even if you were long here, you probably should have been selling out at the shallow fib and taking profit. But all of that said is that even though we're in the bull zone, almost getting ready to go back into the bear zone again, I wouldn't be considering this until it got way back into some of these, way back lower lows back here inside this fib extension zone. And that's where this target of a previous threshold or this bull zone right here is the target inside this extension. And that's where that target comes from as I scroll it back over. So to me, again, gut thinks it's going to that target. Do I know exactly if it's going to that target? No, but that's why I have a system. So if it's in the bull zone and we get 3 settles above that, then I'll be buying it to take it up to this point where the target would be after 3 settles. But until we get to 3 settles above that previous shallow fib, I'm not doing nothing.
I ain't touching it with a 10-foot pole.
Nope, not touching it. It's pretty ugly. I think the thing could get pretty ugly pretty quick.
Well, you've been talking, man. We've been friends for years here. I've been looking at that heading down toward 93 at least, 92 area. We got reject up there around 107, 108, which is what we were looking for. And it just, like you said, it's been ugly. I think that's what we do. I think we continue. We've been in them by the way, real quick here, let me just say something. I know people have asked about, well, what they've asked me, they might have asked you as well. Yep. But what do we think about the fact that Bitcoin and the dollar are correlated or not correlated, and that they were, and now they're not, or they weren't, and now they are, or they're reverse correlated, all this kind of stuff, right? So the one thing that hopefully it clarifies it for most people is you're looking at a very short period of time when you say that, because if you zoom out, what you'll notice is the dollar, the DXY, has been in a sideways movement basically since, what is that, like I guess it's been 2 years now, 2.5 years, something like that. And it's been a very wide range from like that 100 to 108 kind of area.
Yep.
But it has been going sideways, and Bitcoin has been going up that time, pretty much the entire time. So what you're noticing, if you're noticing a lack of correlation or a reverse correlation, all these things from what you normally expect, well, it's because in the macro sense, the DXY has just been going sideways while Bitcoin has been going up. So you're catching it at spurting points in there, which is where you're seeing it. But, Fibbo and I, neither one of us are big on correlated, markets and whatnot. We don't worry about it. We just trade the charts as they are. No need to worry about, what the other markets are doing, whether they are correct this time or not. The way I feel about correlations is if it's not 100%, I'm not interested, or 98%, I'm not interested, because it doesn't help you, right? If it's correlated sometimes and sometimes it's not, how the hell does that give you any edge, any information as a trader? It doesn't. It just gives you confusion.
Yep.
So that's kind of how I look at it.
I had a quote a while back. I think I had it in like book notes or something. It was along the lines of like correlations are like bad relationships. They seem meaningful at first, but then they fall apart when you need them the most.
That's one of your best ones, man. I like that one. I like that one.
So yeah, that was from just stupid things that I write all the time. I just like writing little witty quotes here and there. But like, so if you take that aspect, it's like I would rather, like, when it comes to correlations, to me, it's like, well, what time frame do I look at? Do I look at a correlation over the last 5 days, or do I look correlation over the last 10 days, or last month, or last year? Like, what correlation do you look at? Because at any time, those correlations can break down.
Yeah.
So I don't like to really put too much faith in correlations at all, really, and trade each market separately. Because to me, I like this. Like, I'm trying to measure that social mood and that psychology of the market. And to me, the players that are in the dollar market don't give a shit about Bitcoin. I mean, the dollar is a global, crazy, so many inputs that go into figuring out what that fair value is economically, that people can't even model the dollar. Like, when you go, like, it's like trying to model the GDP of a country. Like, okay, we can kind of get an idea, but I don't know. So to me, I like the psychology that's happening in each market separately, because there's different players, there's different reasons. Now, yeah, they might correlate every once in a while, and to me, you can get kind of stuck in that sometimes.
Yep.
To where if you're playing along with the correlation, all of a sudden it doesn't, then it could really get you bad. Especially if you're spreading it, going long one way and short the other. If it starts going the other way, you're losing twice. And I'd rather not do that. So I just hate correlations, but some people might use it really well in a good model. Don't get me wrong. If somebody knows how to manage all of that, you could do really well with it. It's just not my cup of tea.
And by the way, guys, again, let me give you another bit of information. And for those of you that don't know, Fibo, you've got what, a CMT? You're certified market technician?
Yeah. Well, yeah, I got both, like CMT and then the CFTE. Yeah. They're both the same, just different organizations.
Exactly. And you've been a professional analyst working for companies, trader, for how long? Can you count back that far?
26 years.
26 years. All right. So yeah. I want to point that out, guys, because a lot of times on these shows, you're going to talk to people that really don't have any, any real education, any real world experience and whatnot that's going on. And so when Fibo says something, whether he ends up being right or wrong along the way, you can be, at least you can rest assured that he does have some pedigree, some kind of, reason for being why he really feels the way he does about certain things. Doesn't mean you have to agree. It doesn't mean, but it means that at least when you're listening to it, there is something there. He's not some kid that just rolled into Bitcoin, a year and a half ago and, thinks they know everything's going on with markets and whatnot. He's been through a lot. He's like me. He's been through multiple market downturns across multiple asset classes and whatnot. And so I just kind of wanted to put that out there because, I know you never talk about it or you rarely ever talk about it. And I want to make sure that our viewers know.
I try to keep it separate. I kind of keep it separate. But yeah. I mean, the other markets that I'm in, I basically manage energy all over the world, basically, power or, electricity, natural gas, crude oil, all the different oils out there, all that kind of stuff for Fortune 500 companies all over the world. That's what I do for a living. I'm the TA guy.
Real quick. And that's why he doesn't talk about that stuff on this show or any other show, guys.
Because I don't want any conflict of interest at all. At all. So that's why I kind of keep it separate and I don't really talk about it. But the things that I'm doing here are different than what I do at work. Put it that way. It's not the same techniques. I don't use this this model that I use in crypto at work. Put it that way. So I keep it completely separate. And that's why when someone ever asks me, well, what do you think about natural gas? I'm like, well, I'm not going to tell you because there's a lot of people that pay me good money to otherwise. And I don't think they would want that out, that kind of thing.
Well, they pay a lot of money.
Yeah, it's like, well, what the hell are we paying you for? I could just watch your stream. That kind of thing. So yeah, I kind of keep it separate. I keep it separate.
Exactly.
And that's why I like I would do this full time if I didn't enjoy my job, because my job is technical analyst and I love it.
Yeah.
So I that's why I keep it, because it's fun. Where are we at? All right. SPY. Let's go on to SPY. Getting killed. Here, let me move the fibs here for you. We went into the bear zone, working our way down. This is where I'm looking at. Can't read the number. What number is that? Oh, 55.97 is where my target is to buy while in the bear zone. So we're in the bear zone, working its way down to the bottom of the zone, and that's where I would actually buy it while it's moving on the downside. Now, if it gets down to this point and it fills, then the shallow fib would be at 56.56, and I would actually probably trade that. So if I bought it, I would trade it out at the shallow fib while it's in the bear zone, and keep doing that as long as it lets me, and then really get established on longs once it gets back into a bull zone. But that's going to be that's going to be the way I'm going to tackle this. Is if it gets down to that point, and it's selling off pretty good, so we could probably get down there, maybe today. If it doesn't hit, and this is just me, this is where the risk averse comes in, is if we're getting toward the end of the day, and that's basically, I don't know what time it closes, the futures close, but given that it's Friday, if this comes down close to this point, I'm not going to buy it over a weekend. That's just not how I like to play it. So unless this thing comes down here in the next hour for me to trade it, I would day trade it. I wouldn't carry it over the weekend. That's just me. It's too risky to hold things over the weekend like that. When I'm just getting into a position in a strong downward market, I'm not going to do that. So that's what I'm doing on that. SPY on the daily. Been in the bear zone. My target was down here at 51.50. Has been where I've been waiting to buy it. So 51.50 on the daily, and it's 55.97 on the 4 hour is the two that I'm looking at the moment on that. So the daily or the 4 hour, the daily, both in bear zones, and then when you look out at the weekly, that also went into the bear zone, but it did not have three settles under the previous shallow fib yet. So, and we're kind of right there. So if we get three settles underneath this, then that's going to wipe out this whole market for me. And I would have to be looking at, minimum 45, 48 down here before I would even get considered long in a bear zone on a weekly once it filters out the break of this previous shallow fib. So another reason why I don't really want to buy it right away because some people were probably asking why didn't you buy it at the extension like you normally do? And I would normally buy it there, but with this being in the bear zone, I want to kind of take a step back and say, okay, let's watch the exposure on this, because it could get nasty and you could lose a lot of money really fast. And you don't want to do that. So that was a good call on my part, since we got this large ass red candle here. But I'll be looking at this target here over the next hour. Oh, let me see when that is. So we got 4 hours. 4 hours. Yeah, we got 4 hours until it closes. So if the 4 hour here if it hits this in the next hour, I'll probably buy it and just day trade it, or at least get out of it before it goes into the weekend. Yeah.
Well, I see Sats here is in the audience, and as you know, he's with us over there at TWC, and I saw that he had a great trade on the decline here, a great short trade this morning. I think he made like a 5R on that, and so
on the futures.
Yeah, on the S&P there, yeah, this morning. So, for anybody that doesn't know, we started live trading. I do live trading now 3 days a week. We're trying to get it to 5, but we do it in the morning when the market opens, Mondays, Tuesdays, and Thursdays. I Can't do it on Wednesdays or Fridays because I have our morning shows that I've been part of. So trying to see if maybe we can do it later in the day on those 2 days, maybe like the last hour before market close or something. But yeah, man, we've been doing that this week, and man, we've had a lot of guys do some really great trades there with it this week. So, but yeah, if you guys want to join in there, you can get in there. You'll get access to Fibo stuff. You'll get access to Andrew and Vince's trades. I do a market wrap every night for for all the different markets. We kind of look at different charts and things that are looking up and where we could be looking. As far as all that goes, we do the live trading. Again, you'll learn Fibo's system, not just get his trades. I mean, you'll get those too. He'll tell you where he's entering, like he does here, every day, and he'll tell you when he's, the position's closed and all that. And you'll learn the threshold theory system, but you'll also learn through the other side of TWC with me. You'll learn how and why markets actually move the way they do. So I teach LA Wave, I teach Wyckoff, and I teach price action and volume. But I teach them all in a way that you can see that they come together and they give you this understanding of what's actually going on in the markets. And that, that better helps you understand where targets may be, forecasting price action, stuff like that. So it is literally the most well-rounded place that you could probably join to really learn trading. So you can jump over at TexasWestCapital.com and join us there. We'd love to have you join us, jump in, say hi in a chat somewhere, tag Fibo, tag me, tag Sats, tag anybody.
Well, it's a party at Sat's house this weekend with a 5R.
Do what now?
I said it's going to be a party at Sat's house this weekend because you got a 5R.
He's right up the road for me, man, in Austin. I'm going to jump on over there and knock on his door and be like, dude, you got the beer and the barbecue? I mean, what's going on?
Celebrate that one. Oh, shoot, where were we? Oh, no, you were just talking about my group and the system and all that. Just a little caveat is don't think that you're going to get trades every day, because I don't want people to come in thinking that there's buys and sells going all the time.
Right.
I'm a swing trader. Sometimes we have 3, 4 trades, 5 trades a week. Sometimes we only have 5 trades a month. So it's like, because it's built to be a signal for higher probability trades, and sometimes those take time to set up. But once they do set up and it starts running, then it gets fun. It's good times. But then again, if you join, I might not have a trade for a week after you join. But there's plenty of videos and there's plenty of things to read. I'm there, ask questions, all that kind of stuff. And then I'll get back doing it. But I had a 2 or 3 different AMAs I'll do. I'll have an Ask Me Anything for a couple hours. People can come in and ask all the questions you want. I've done that. I'm going to get another one established here pretty soon. And those seem to be pretty good too, because they can come in and ask anything about my system or charts they want to see or anything technical analysis related, anything like that. So we have little things here and there. I just want to make sure that if you join, you're not going to get trades every day. I'm not a day trader, that kind of thing.
Right. Well, at least not there, but also, again, we do have Vince and we do have Andrew.
Yeah, there's others in the group. Yeah.
Mine as well. So Fibo's just making it clear that with his system, it doesn't mean that it shows trades every day. Though when things are going well, the trades come in quite a bit. But
and you got to really be on top of it too.
Yeah, exactly. So it's just a really well-rounded place to be. We've got great people. Data's here, Sats is here, Mark is here, and some others, and it's so. It's just a great place to be and learn. I mean, people think that you have to learn to trade and do it all on your own. Man, it's a lot more fun when you got like-minded people that are also, educated enough and experienced enough to look at the markets with you and maybe find trades you're not finding. You'll get to share each other, and it makes a lot better for sure.
Yeah, there's OGs in my group that I love. They've been around a long time, like Jesse and a whole bunch of others. Like they've been there a long time. They know my system. They even like say, hey, dude, you made a mistake here, and that's good. Like people are calling me out, which is good, because when you look at 1,000 different charts, mistakes will be made. Yep. So, but I got guys who'll be like, hey, yo, Fibo, check that out, man. That's not right. And that's awesome. I'm like, holy shit. I'm like, yes, they get it. They understand. That's awesome. All All right, let's move on real quick. This is the only alt I've been trading.
Sui, yeah.
I traded it in the bull zone here. We actually had a couple trades. So when you look at this, you went into the bull zone, went up to this point right here. Bull zone, hit this target right here, came back down, hit the shallow fib, hit the next target right here. And then when I moved the fibs up to this point, the shallow fib was bought again. So basically when you added these two together, it was a 17% gain off of the trade.
Nice.
So, but now I'm long at the 38.2% level at 26366. I had a limit order in there that was filled. But then again, we're back down here testing the 61.8% level, still in the bull zone though. But then again, we've already had 3 settles underneath the shallow fib. So if this clicks into the bear zone, I'll just get out and then we'll reestablish something else. So I'll take a little bit of a loss here. So right now it would probably, like if it ended up going into the bear zone right now, where's the, yeah, let's just do this. So basically I'm long at this level and say it went bear zone. I'd lose 5%, but I would net 12% for that bull zone. So I'd be happy with that. Happy with that. But that's where we're at the moment. Still long. This could still turn around. Who knows? Just kind of playing it. And then a couple of other things. MicroStrategy or strategy or whatever.
Strategy, you want to call it. Soon to be Strategy Bank.
Yeah, soon to be straight. Yeah, exactly. I was watching it here on the daily, going into the bull zone, came down here, kind of corrected back, went into the bear zone, rallied really nicely here, but did not break back into the bull zone, which is a good thing because I'm not buying it on that rally to the upside. In the meantime, the whole freaking market's dropping, so it's like, so to me, that was good that I didn't buy because it didn't click into the bull zone. And then again, my target's not until the full retracement because we've already had 3 settles underneath the 61.8% level. Even though it rallied up, came back down with it staying in the bear zone. There's a lot of risk to the downside on this right now. So to me, I'm waiting for this or click into the bull zone again. And I'm not going to do it. And a lot of stocks have been that way that I follow. Even on Tesla, Tesla did the same thing. This actually hit at 100% right here. If you wanted to buy the target right at that point, I'm down here just because SPY's been kind of on the downside, different things like that. I'm waiting for a much further correction to get back long, but this also rallied up, but was nowhere near getting into the bull zone. So all of these moves that I saw in a lot of these stocks are lower highs that didn't click into a new bull zone to get the trend going. So I saved there. I didn't buy Tesla. I didn't buy Strategy and a couple of others because it never clicked the bull zone, which is good because now that it's correcting back, maybe I'll get the SPY bought on that. And then maybe we get this bought on some targets on the downside before going long again. But that's all I got. Hopefully, I'm rambling all over the place, but hopefully all these charts kind of help give you some guidelines on what I'm looking at least try to get some direction. And right now the direction is still down on stocks, down on SPY. Just kind of waiting out for some good support levels.
Yeah.
Exactly. So that's what I got. Anything else?
Man.
Questions, comments, concerns?
It's just that great beard, man. Was that a beard or is that just a goatee? What you got going on there?
Actually, I just kind of trimmed it off a couple of days ago. I kind of looked like you, and I kind of brought it back to kind of a restart. You know what I mean? It's a restart.
How can we get you on Beards and Bitcoin without a beard, man?
This is a beard.
That's stubble. That's stubble. Come on, man.
Well, I'll start growing it out from this point, and then I'll get on the show once it gets some.
That's the requirement. Got to have a beard. Told Gary that too. Said, Gary, get on here. Need a beard, man. He's like, I don't look great with a beard. I'm like, I don't care. Get one anyway, man.
Get one. He'll just paste one on his face, like one of those like wigs or not wigs, but fake beards.
Man, I love Gary though, man. He just says whatever's on his mind, and he often just says stuff, just comes out, and it's just I love it. No filter,
Oh yeah, no, he's as real as could be. Like he is.
Like him or not, he's as real as can be, and that's what I love about it, right? I love realism because we spent so much. You're old like me, man. We're wise. We're wise. You know, we've been through a lot of this recently. You know, years and years now about just kind of you have to be careful what you say, and you can't be authentic, and you can't be real, and everything has to be kind of watered down, you know, otherwise you're going to offend somebody's, you know, emotions. And man, I'll tell you what, I got to be honest with you guys. If you're offended emotionally, like significantly about what somebody says, that is all on you. You got to find a way to figure that out because the world does not care. Governments have been trying to keep your, you know, your talk down or whatever, but people always win. We really want authenticity out there. I want to, if I'm talking to somebody, if I'm meeting somebody, I want to know who they are. You know, be real with me. Let me know. Don't get this watered down version.
Yep.
Right. And so,
and just don't get offended. I mean, there's no reason.
Yeah. You
know what? There's a book I read a long time ago. What was it? Oh, The Art of Not Giving a Fuck. Have you ever read that book?
Yes.
That's a really good book.
It is a good book with a great title.
But it makes sense though, because when they look at the stories that they have in that book, and you look back, I think one of them was the guy from Megadeth and Metallica, when the guy from which basically they got rid of the guy from Megadeth, and Megadeth was still a really good band, but it wasn't Metallica when it comes to like the dollars and all that kind of stuff. But that's one of the stories. But they do all these different stories on reasons not to give a fuck about all these different things, because there's no reason. Like it's just such a simple book. But then when you look at it, it's like, why would I get my undies in a bunch for just stupid stuff? So it's an easy read, but you know, if you get a PDF of it somewhere, it's an old book. You can probably find it anywhere.
It makes life so much easier, guys. You don't realize how much nonsense and stress or
less stress. Nothing stress-free, but less stress.
Yeah. But you don't realize how much extra you put on yourself when you're so concerned about things that you have no control over, things you can't be that you shouldn't be concerned about. And that's, again, I always talk about it. It's just, that's what I teach in trading, right? Don't worry about the things you can't control. You can't control where price is going to go. You can control how much you're going to lose if it goes against you. That's what you're doing. That's what you should be doing. And when you really sink into that mindset, that will like push out in the other areas of your life. And you'll start seeing a lot of what's talked about in that book really in there. And like Fibo said, it's a real simple book, but we get so caught up in all these things that we don't realize, you know, we get away from the simplicity of it all. And you know, again, in trading, the simpler you can make it, the more successful you're likely going to be when it comes to trading. If you've got 57 indicators on your chart that you're trying to decipher at once, guess what? Decipher at once, you're going to be miserable. So,
I mean, Mark nailed it right there. He said, getting upset or offended is the same as having an emotional reaction to price going on one way or the other. I mean, that's true. Because a lot of times, like a lot of people will be like, I'm following my model, and the market's going in a different direction than what my model is saying, and people were like, aren't you going to do something about it? Like, are you going to get out? I'm like, no, my system didn't tell me to get out yet. So I'm not going to get offended.
What if it goes against you?
But I hear all that all the time, like, and especially on X. Like, if I post a chart, you know, 2 weeks later, somebody will come by, oh, that didn't work. Well, if you would have followed me, it did work. It's just because there's risk management behind it. It's
exactly.
Exact absolute to absolute price here. There's things that
system worked.
Yeah. It worked, but you had to get offended in between it because you're like, well, why didn't you do that, or why didn't you do this? I'm like, oh, I don't know, because I didn't want to.
Guys, listen, if you want more Fibo, you can get him just about daily, except when he takes his vacations. I don't know how he gets to do that. Anyway, you can join us, man. TexasWestCapital.com. Come on in. Again, join us, say hi, ask questions. When you first come in, just make sure you go to the welcome read first space. It's in your checklist. Go through the, the thing there. There's an onboarding video below. I've got to update that. We got some new stuff going on now. But that'll give you the layout and the structure of the way the whole platform's set up and where you can find the information and stuff. And man, just dive in. Even if you stay a month, guys, I'm telling you, if you're serious about putting your mind into it, it'll be likely the best $97 that you spend in your life. Even if it's just a month. Now, obviously, we've got more stuff than you can do in a month, but at least try it and get it figured out, and you'll see what we're talking about here. No fluff, no nonsense. We don't blow smoke up your rear end. We're honest with you. We're realistic. Again, between the both of us, we've got 50 plus years of experience, guys, real world experience. And that's what we're trying to help y'all with, even though we teach systems and all this other stuff. But it's all that other stuff that we teach about risk management and what's going on with your emotions and market psychology. That's the stuff that really makes the difference right there, okay? So anyway, look at Ash. You guys are as real as it gets. Wait, no, it's no filter. I got the wrong one there coming up. I like that. Having no filter is not my choice. That's awesome. But, Ash there. Yeah. Sat says, join for the education, stay for Mark's jokes. I love it, guys. I love it. Hey, listen, we're glad that y'all joined in. As always, the only thing you control is how much you lose. So please keep working on that risk management. I'll be back next Wednesday, Beards and Bitcoin with Andrew and Tillman from Arch Public, other good friends of mine. And, where we just kind of look at Bitcoin, even from more than just a price point perspective. We look at, what's underlying Bitcoin. How does it get integrated in the, in the system, in the financial system? We're not here to tell you that we're excited it's doing that or we're not. We're just saying, listen, this is the way things are likely to happen, and this is why. And these are the realities. And in that way, if you're investing or trading, you can use that information to trade or invest as it better suits you. Just with a little bit more understanding. Again, between the three of us on that show, we've got upwards of 70 years or something of markets and TradFi markets and Bitcoin mining and crypto and all this stuff. So,
and some of the best analogies.
Yeah. Tillman.
From Tillman.
Tillman's the analogy guy. He'll come up with 3 or 4 of them in the middle of the show. It's great.
It is awesome.
But other than that, like I said, man, join us, TexasWestCapital.com. We'd love to help you out. We'd love to help you learn. We'd love to get you more acquainted with markets. And other than that, Fibo, are you going to be back in 2 weeks? Do you know yet?
Yeah. Yep.
All right. You guys heard it here. If he's not, I'll give you his personal home address and his phone number.
No, don't do that. I got landmines out there. They might get killed trying to get in here. No, I'm just kidding.
All right. Well, hey, man, I appreciate you taking some time out of your day to join us here, buddy. I will catch you back in Texas West Capital, back in the platform, and hopefully everybody else is going to come join now and see us. Other than that, y'all have a great weekend. Trade safe. Quarter is going to be over here in just a few hours, and we start a new one. So it's going to be fun. It's the markets, guys. Money to be made either way, right? All right, y'all. Yep. Take care. Thanks a lot for showing up. Share the link, hit the thumbs up, hit the like, all that fun stuff. Leave a comment, and we'll see you next time.